Today's trade is Burgess from Nedbank Private Wealth. Carl, thanks very much for coming to studio.
Thanks for having me.
And I mentioned the currencies because that all seemed to flow from the US GDP numbers that were released a little bit earlier. So what was kind of the ripple effect?
So I think it started early this morning when you saw the Bank of Japan not giving us the stimulus that really the market was waiting for. And I thought we might see a bigger reaction on the rand. But that 14 rand level seems to have been quite strong. And then we saw the GDP numbers out of the US disappointing. And that helped, it actually helped the dollar weaken. And so the rand strengthening but also strengthening against the pound as well.
Yeah, so I mean, against the dollar, it was about, 1387. So that's been its best in a long
since
time.
2015 November, in fact.
Okay, and against the pound, so what happened to the rand-pound exchange rate? Because that obviously affects one of the shares that we'll just be discussing today, and that's SAB Miller.
Yeah, so I think you are seeing just some general rand strength at the moment. So that affecting SAB Miller, as you said. So two important announcements out of SAB, and obviously the pound, being affected by that. So, the SAB price being affected by the pound exchange rate.
Okay, SAB Miller, they have formally backed the bid, so that is the board of SAB Miller has formally said to shareholders that they would recommend they vote a yes on the full and final offer from AB InBev, and that also seemed to follow the Chinese regulatory approval this morning. Yeah,
so I think there'll be some very relieved shareholders. After Wednesday night, there was that announcement saying that SAB sort of staff had to stop all the integration with ABI. So guys kind of thinking that the deal might not go through. But subsequent to that, we have seen, so the announcement for the increase in the bid was obviously before that, but now we've seen the board backing them and getting the regulatory approval from the Chinese, which of course were the two boxes that needed to be ticked. So now it's all up to shareholders, really.
Okay, would you expect shareholders to back the bid if the board has recommended it?
I do think so. I think the majority of shareholders probably will. I think the lockup period is quite unattractive for your general retail investor. But to be honest with you, it's not as much of an easy sort of option as it was, post-Brexit or before Brexit, actually.
Exactly, because of the fall in sterling, because what that did was make the partial share alternative look more attractive, because it sort of values SAB Miller at about £51, whereas the cash offer that you'd have gotten or will be getting is £45.
Yeah, exactly.
But of course, also the rand was a hell of a lot weaker earlier this year, which is what pushed SAB Miller shares up to close to 1,000 rand.
Yeah, absolutely. So I think you probably would have seen the SAB share rally a bit more if it wasn't for the pound, or the rand strengthening against the pound this afternoon.
There were also a couple of corporate results out, which is fairly unusual for a Friday. Barclays Africa came out with numbers. What did you make of them? So
a pretty solid set of numbers, to be honest with you. And if you look across sort of the different business segments, so you're looking at sort of mid to higher single-digit growth. The African numbers were exceptional, up 17%, which is great. And funnily enough, looking at Barclays PLC in London trading this afternoon, up over 6%. So shareholders liking the fact that they're getting rid of Barclays Africa Group, which seems to have done quite well, firstly. And then, secondly, just focusing basically on their UK and US operations. But, if you look at the share and how it's been trading lately, it's been, I say lately, probably over the last year, it's been stuck in a band between about 150 and probably about 125, and trading at a price to book of 1.4. So not exceptionally demanding, and I think pretty much on par with something like Standard Bank, which also has that African exposure. But I think that does reflect sort of the concerns, and which management highlighted earlier. Brexit obviously hasn't played out fully yet, so that is one concern. A slower growth environment at the moment, globally and domestically. I think that's the share price reflecting that.
The share price coming off 0.6% today, but was it also not due to the impairment charges increasing? So those are up almost 50%.
Yeah. So I think you're going to see, going through the next 2 or 3 years, you'll probably see quite a few funnies in the numbers just coming through, just because of the Barclays basically selling them off. So a few differences there. So I think if you have to look at it, will you be rushing out to buy the share now? I think if you look at it over a 3-year period, probably reasonable returns. But the numbers that we have penciled in, I don't think there's enough of a margin of safety for us to be investing at the moment.
Because there will be a lot of bank stocks coming out with their results in the next couple of weeks or so. So do you have a particular pick in the sector then?
So I think Barclays probably are going to have the most attractive results just from a top line growth number. So watching Nedbank coming out on Monday, and then FirstRand, obviously, just to see if they can maintain those ROE numbers. So I think at the moment, probably FirstRand is probably the pick of the lot. Would I be buying at these levels? I don't think so. But yeah, that's kind of what I'll be watching at the moment.
Okay. What about ArcelorMittal? They came out with horrible numbers.
Yeah.
But they warned us that they would be bad, so they made a headline loss of almost R500 million.
Yeah. So that number was really hit by the lower steel price globally, and that's obviously on the back of a slower growth in China. So if you look at it, really flat numbers, actually, if you take out the 10% import price or import tariff that the government has helped Arcelor with. So I think from that perspective,